Hello there.
There's been a lot of talk about Nike recently. They've got a new CEO and they're trying to turn their fortunes around. So, is that the next stock we should invest in? Or should we invest in their age-old competitor, Adidas? Or perhaps the new kid on the block, On? In our portfolios this week, one stock is massively up, but a lot more are very far down. I'm the Gentleman Investor. This is episode 9. Let's invest. As always, we're going to reveal who won last week's battle. We're going to take a look at our portfolios, and we're going to battle 2 more stocks against each other. Without further delay, let's get underway. The holiday stocks battled it out last week. IAG, the consolidated airline brand, battled it out with On the Beach, the online holiday retailer. It was close, but the winner was On the Beach. On the Beach was the winner, but terrible news. I'm already massively regretting it. That stock spent all of last week going down, down, down. Right, time to take a look at how our portfolios have done this week. By way of reminder, it's currently £25 into each of 3 portfolios. That'll go up to 26 when we get to 1,000 subscribers. The first portfolio is the Battle Royale, where you tell me which stocks to invest in. The second's the Benchmark, where we keep track on how the performance of the Battle Royale is doing. And the third is the Income Generator, where we're going to pay out all the proceeds of the dividends to a lucky subscriber every 6 months. Looking at the UK market holistically, it didn't have the best week, losing 0.02%. I wonder if that's anticipation of the upcoming budget taking place this week. The Battle Royale, however, fared a little bit better, up 1.6%, which is lovely to see. In principle, however, when you take a look at the holdings, you'll see why that might not be the case. We're now up to 8 holdings, with the addition of On the Beach. Now, this might be one of our worst immediate investments. Hopefully, again, long term, this will be a changing scenario and will improve, but over 7 days, it's down 5.8%. Now, we will have just invested in just before close of business on Friday, so we won't be quite feeling quite the full effect of that, but not great anyway. Everything in the red, as you can see, bar for one savior, Tesla, up 23%. Propping up our portfolio and keeping things together, getting us up into an average of 1.6 up. Taking a quick look at the benchmark, which of course, if you'll remember, is the Vanguard FTSE All World. It is down over the last 7 days by 0.08%, so generally a downturn everywhere. And finally, the Income Generator. As always, we're more interested in how much money it can make us in paying out dividends, but it is also down on the whole over the last 7 days by 0.6%. Looking at the payouts for the Income Generator, in total we're now up to £6.17 for the annual. The next distribution is £1.19 and £1.08, and that means that the next payout for our 6th monthly winner is £2.27. Last but not least, this is how the portfolios are currently performing overall. We're up to £200 added into each. The Battle Royale up overall, but by not as much as the Benchmark. It is nipping just ahead, and that's only thanks to Tesla. So we're still losing out to the market. Finally, Income Generator ticking over. Nice small amounts in the green.
3, 2, 1, fight.
This week's theme is kicks. Who's got the most sought-after sneakers? Is it Nike, Adidas, or On? We all know who Nike and Adidas are. Nike quite sporty, and they've also got the whole range of Air Jordans and fashionable shoes like that. Adidas, you might recognize them from these Samba ranges, and same as Nike, a lot of athletic apparel. The ones that were a little bit newer to me, On. I've seen them out and about now that we can see what they look like. You might be more familiar with them than I am, but this is what their website looks like. Comparing the 3 companies on Simply Wall Street, Nike first, then Adidas, then On. Nike apparently doesn't have as rosy a future, again according to Simply Wall Street, and some of that might be waiting to see what the new CEO has to do, but they do like the future forecast for Adidas and On. It does still say, however, that for Nike, the earnings are forecast to grow at 4.05% per year, but that does compare with Adidas, where the earnings are forecast to grow at 40%, and On, where earnings are forecast to grow at 24%. So Nike a little bit behind in that regard. And as we're chasing the market, I think we can take Nike right off our list and look at one of these other two and hope that the future is rosy. Okay, let's have a look at and compare their high-level metrics. As you can see, they're quite different companies under the hood. Adidas much larger and more established, paying a dividend, whereas On doesn't pay a dividend. On is also more volatile with a beta of 2.24 compared to Adidas, which has 1.15. Adidas, however, has a negative earnings per share at the moment, but makes a massive revenue, 21.43 billion euros. PE ratio, frightening from Adidas's perspective, 195, although is that to do with the low earnings? Is that accurate? Probably not, versus 91 for On. Both of these, are they the best investments? You let me know. So for this week's battle, I think it's going to come down to personal preference. Which band do you personally prefer and enjoy the most? And therefore, which one do you think has the best potential for growth over the long term and hopefully generating results for us shareholders? It's going to be personal opinion, but mine is Adidas. Do you agree? Do you think there was any other brands that we should have had a look at? Please let me know. I hope you've enjoyed this video. Thank you so much for watching and see you next week.
Goodbye.